Hi, I'm Tom Lydon with Iris.xyz in San Francisco at the Hightower Apex Conference. And I'm here with Brian Weisenberger, who's Executive Director of Ascendant Capital. Great seeing you, Brian.
Thanks for having me.
You guys specialize in private equity.
We do.
And advisors are getting more and more interested in private equity. So briefly, why are advisors diving into private equity at this time?
Yeah, I mean, I think if you generally look at it across the United States, there's 5.5 million companies in this country, and less than 1% of them are traded on a public stock exchange. And so, just from an opportunity set, you're really eliminating 99% of the possible equity investments if you're just focusing on the publicly traded groups. But I think more to your question, the reason people are looking to private equity is that over virtually any time period, 5, 10, 15 years, when you look at the performance of private equity, it has outperformed virtually every other asset category, and it's because rather than focusing on short-term profits, the quarterly profits, and really trying to maximize short-term stock price, private companies and private equity can focus on long-term growth initiatives that ultimately lead to that better performance.
Got you. But it's not as easy as the stock market or bonds. There aren't exchanges. You really have to know what you're doing. And you work directly with advisors, but really you kind of go through and do a lot of work to really vet those companies that are doing the right thing. So talk a little bit about that, and talk specifically about how you work with advisors.
Yeah, absolutely. I mean, I think one of the key things to understand is that just like public stocks, there are multiple categories. There's large cap and small cap and growth and value in the publicly traded groups. In private equity, there's a wide range, ranging from venture capital to seed investing, angel investing, and that's kind of that high risk, high return, pre-revenue. We're really focused on the other side of that map. We're focused on acquiring already profitable, established businesses in industries that are well balanced. And so it allows us to invest in a more stable side of private equity investing, which is more suitable for the advisor community and their individual investors.
And their clients.
Exactly.
So with that in mind, if I'm an advisor, I come to you and I say, look, I've got some clients that have excess capital. We want non-correlated assets. Give me a portfolio that you might put together. You would lay out these companies and the pros and the cons and that type of thing, correct?
Yeah, so we really work in a fund structure. We've got several different offerings that are focused on specific industries, and then a diversified offering as well. If there's one common thread that runs through really everything that we're doing, it's that we're investing in companies that really adhere to 4 criteria. First and foremost, current sustainable yield, companies that are profitable, that we can distribute that income to our investors. But we also want to focus on companies with strong management teams. We're looking to partner with these companies, and so we want to help the existing owners and operators take their business to the next level. And then finally, and probably most importantly, is that we're focused in industries that very specifically have certain characteristics. They are historically recession resilient, have been able to demonstrate profitability through thick and thin, and then in industries that have high barriers to entry. So that allows us to be within a comfortable range in terms of an acquisition.
Great, excellent. So Brian, if an advisor wanted to find you, what's your website?
Yeah, absolutely. You can reach us at ascendant-cap.com, where it outlines all the things that we're doing.
Excellent. Great seeing you. Thank you.
You too. Thanks.